Mr. Murali Ramakrishnan, who's MD and CEO of South Indian Bank. Mr. Ramakrishnan, good morning and thanks a lot for joining us. This is Pavitra. So I have to begin by asking you about the slippages. It is quite elevated at 435 crores this time around. So can you tell us what went wrong on that front and what has led to slippages being so elevated?
Actually, 435 crores, in my view, is not elevated because if you recall, we were giving a guidance of 1,600, 1,700 crores for the year. So it's pretty much in tune with what I have been indicating. Having said that, 435 crores includes one big corporate account, which alone contributed to close to 1,100 crores. So if you actually looking at other slippages beyond this one corporate thing, I think it's pretty much in tune with what we had experienced even last quarter. And I must say that it's pretty much in tune with what I gave as a projection for the full year. So I feel that it is pretty much in line with what we have been articulating.
And this slippage guidance of about 1,600, 1,700 crores for the full year, does it include, large accounts which are likely to slip? Can you talk about how you arrived at this forecast?
Yeah, no, we don't really foresee very big, large accounts to be slipping. Even this one was something which has been in our radar for some time. So, I mean, all of us know this. This has been discussed thoroughly in the market also. So, but for that, I think if you knock that off from the corporate slippages, hardly any slippages in the corporate book. And I'm also happy to say that out of the 27,000 crores of new book which you have added from October 2020, our GNPA in that new book is less than 0.02%. So there is no slippage at all in the new book which I have added over the last 21 months. So these slippages which you are seeing are also were old legacy accounts, and it's clearly coming down, as you could see in the way our even profitability, etc., is going up.
Okay. Hi, Mr. Ramakrishnan. Good morning, sir. Your net interest margins have come down a bit compared to the previous quarter. YOY, of course, it's improved. Can you give us a sense of how they could trend in the coming quarters?
Net income margin, first to explain the small drop in net interest margin. As you know, in Q4, we have had a very good recovery and from the NPA accounts and return of accounts, etc. So that clearly has led to the income going up a little bit. Otherwise, this quarter actually, without such big recoveries happening, still our NIM has performed reasonably well because of the way all the asset products have started now giving us better yields than what they were giving earlier. Overall, we would want to move towards a 3% NIM, currently at about 2.78%, and our endeavor is to reach 3% milestone as a first milestone. So we are working towards that.
All right, working towards 3% net interest margin. Sir, also on the loan growth, it's come in quite strong at 11%, and this is after a while that we're seeing this kind of pickup. So can you tell us where this has come from, and is this kind of loan growth sustainable? What is a good range that you would expect on this front going forward?
Yeah, loan growth, actually, if you closely look at the way the bank's loan growth has been growing, it has started growing from last December onwards. So actually, when I was doing the complete restructuring of the bank, both in assets and liability side, our total advances book grew from 65,000 crores, which I had inherited. It came down to as low as 55,000 crores. And we started actually reversal of this trend from September of last year. And we started actually having a good growth from December of last year. So December and the last quarter of last year, we saw a good growth coming, and that momentum is continuing. So year ended March 22, we showed a growth of 4% on advances. This year, I'm expecting double-digit growth for the full year, which is clearly evident even in Q1. We have grown almost close to 11% now. This growth has come from, of course, the corporate has been a big contributor, but we have also been seeing good traction happening in personal loan, good traction happening in gold loan, good traction happening in auto loan. And the SME, though the book is degrowing, but then our disbursements are increasing now. We are quite cautious in onboarding SME and mortgage cases because that's the one which has given us pain in the past. So other than that, all others are firing quite well. And I'm fairly confident that even these businesses are actually showing a sense of turning around. And with that, I'm confident that we'll be able to grow by double digits in this year.
What would your credit cost guidance be for the year?
It will be close to 1.9 to 2%.
Close to 1.9. Okay. And can you talk a little bit about the recoveries and upgrades? What were they this quarter and your expectation for the full year?
This quarter, as I said earlier, there is no big force of sixes we have had in this quarter. So to that extent, it's a very stable quarter, I must say. So we have done close to 300 crores of upgrade and recovery for this quarter. But for the full year, we are fairly confident of surpassing at least 1,200 to 1,500 crores. That's the range which I'm looking at in terms of upgrade and recovery for the full year.
All right. Sir, just one more question before we let you go. Are there any kind of fundraising plans that you're looking at right now?
No, frankly, our capital adequacy, as you must have seen, it has reached 16.25%. If you recall, I took over the bank when it was below 13%, and we raised about 240 crores of equity in March 21. And our capital adequacy, as I'm talking to you, has crossed 16%. It's at 16.25%. And with the kind of growth plan we have in growing our advances to double-digit growth for this year, we'll be closely monitoring if there is a need for any raise in capital. Otherwise, I'm seeing that this year we expect the year to be fairly defining year for us in terms of profits accruing to the bank. Therefore, we will time it, we will plan it as and when it is needed. Right now, I'm not really foreseeing any need for immediate raising of capital.
And what is the view on your gross NPAs from here on?
Currently, it's at about 5.8%. My endeavor is to take it closer to 5% for the year end. Net NPA, which is currently at about 2.7, 2.8%, I would want to bring it closer to 2% by the end of the year.
Mr. Ramakrishnan, we'll leave it at that. Thank you very much.